Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within corporate filings. Today we've got a report from Blackstone Real Estate Income Trust Incorporated. And let's just say it is all about the cash flow, or rather, how much cash they're giving back to investors. This filing is basically an update on how much money Blackstone Real Estate Income Trust is distributing, or paying out to its shareholders for the month of November. Think of it like a dividend announcement, but for a trust that invests in real estate, they've just disclosed the amounts they're handing over, and we're going to break down what those numbers actually mean for you. It is always interesting to see how these income-focused funds are performing and how they're rewarding the people who put their money in. So the main event here is the distribution amounts for different classes of stock. These are essentially different types of shares that investors can buy, and they often have slightly different fees or benefits attached. Blackstone Real Estate Income Trust Incorporated is announcing the money they're sending out per S-Hair for each of these classes. For example, Class I common stockholders are getting a gross distribution of 54.9 per S-Hair with zero stockholder servicing fee. That means their net distribution, the actual amount they receive, is also 54.9 per S-Hair. That is pretty straightforward. Now, let's look at Class S common stock. They also get a gross distribution of 54.9 per S-Hair. However, there is a stockholder servicing fee of 0.9 per S-Hair deducted. So for Class S stockholders, the net distribution, what they actually pocket comes out to 45.1 per S-Hair. This difference is important because it shows how fees can eat into your returns. Same goes for Class S-2, which also nets 45.1 Then we have Class D common stock. Again, the gross distribution is the same 54.9 per S-Hair, but the stockholder servicing fee here is much lower, just 0.2 per S-Hair. This results in a net distribution of 52.1 per S-Hair for Class D investors. Class D-2 also receives the same net amount. This highlights how choosing the right share class can make a difference in your take-home earnings. Moving on to Class T common stock, they also receive the same gross distribution of 54.9 The servicing fee for this class is 0.9 similar to Class S, bringing the net distribution down to 45.2 per S-Hair. Class T-2 common stockholders will receive a net distribution of 45.3 It is crucial to understand how these fees are structured because over time they can significantly impact your overall investment growth. These are the amounts being paid out for the month of November. The report clarifies that these net distributions, which are the gross amounts minus those servicing fees, are for stockholders who own shares right before the end of November, specifically after the business day closed on November 30th. The actual payment will be made around December 22nd. This means investors will receive their cash, or if they're part of the company's dividend reinvestment plan, that money will be used to buy more shares automatically. It is a way many investors choose to grow their holdings without lifting a finger. One interesting note is that Class C common stock does not have a distribution amount listed in this table. This is because Class C shares are generally designed to grow in value over time, with their share of income automatically added to the net asset value per S-Hair rather than being paid out directly. So. What does this all tell us about Blackstone Real Estate Income Trust Incorporated? First off, they are actively distributing income to their shareholders, which is the primary goal for an income trust. The differences in net distributions between the share classes clearly show the impact of fees. Investors holding classes with higher servicing fees are getting less cash in hand for the same gross distribution amount. This is a classic example of why investors need to pay close attention to the fee structures of any investment they're considering. It is not just about the headline distribution amount, but what ultimately lands in your pocket after all costs are accounted for. Now, it is important to remember that these are distribution amounts for a single month, November. To get a true picture of the trust's performance, we'd need to look at longer-term trends like their performance over a year or more. However, this report does give us a snapshot of their current payout policy and how they're managing fees for different investor classes. The fact that all classes have the same gross distribution suggests a consistent underlying income generation from the trust's real estate assets. The variations in net pay are purely a function of the different service fees associated with each share class. Looking ahead, Blackstone Real Estate Income Trust Incorporated will likely continue to manage its portfolio to generate sufficient income for these distributions. A key risk for any income-focused fund is the stability of that income. Factors like interest rate changes, economic downturns, or specific issues within the real estate market could impact their ability to maintain or grow these distributions. Investors should always consider these broader economic environments when evaluating such investments. The consistent gross distribution across classes is a positive sign of steady income generation from their underlying assets. However, the differing net amounts due to fees suggest an opportunity for investors to scrutinize which share class offers the best value proposition for their individual investment goals, aiming for those with lower fees if the investment strategy aligns. Overall, this filing is a straightforward disclosure of monthly distributions. It underscores the importance of understanding the fee structures tied to different investment classes within a fund. For Blackstone Real Estate Income Trust Incorporated, the focus remains on delivering income to its shareholders, and this report details exactly how much that is for November, after accounting for various servicing fees. It is a clear reminder that in the world of investing, even small fees can add up significantly over time, impacting your real returns. Alright? That is our breakdown of Blackstone Real Estate Income Trust Incorporated's latest filing. What is your take on these distribution numbers and the impact of fees on shareholder returns? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives into corporate documents. Don't forget to check out our Discord server linked in the description for more community discussions and insights. Thanks for watching, see you next time.